Hey, what's going on, everyone? This is Bennie Childs, founder of the Teach Me to Fish FX trading community, and I am back today with another inspirational video and also an update with my GBP USD trade. Now, as you guys see right now, we are in profit. Uh, a total of a little over $513 minus the commission and swap fees, including the commission and swap fees. We're at 482. Um, for the potential um, trade, we were up at one point 59 pips and trading that at $16 a pip. We were at $944. Now, our goal is just to add some context. We are hoping for the market to push up um, at minimum to the bottom of this gold rectangle that I have on the screen. Now, that gold rectangle is basically what is called the golden zone for which is basically called the golden zone. Got some alerts popping up here, which is basically called the golden zone off of the Fibonacci retracement tool, and the golden zone. And I'll do a video on it a little bit later in more detail. But the golden zone is basically the 50% retracement level. Well, it's in between the 50% retracement level and the 61.8% retracement level. Um, Now, to add in some further context to this, let's drop down to the 15-minute chart just to kind of look at what's going on the intraday. All right, and so we like to, when we look at the intraday, we drop down to the 15-minute, and what is typically in play there is the market maker's method. I've become a little bit more vocal in the past couple of weeks about, or the past month or so, really, a couple of months, um, about the scalping method that we use, which is the market maker's method. And so we see for today, the market has come up, and again, this is on the intraday level. All right, but the market has come up and created. It came up and it created this zone. Let me change the color of this here. All right, so it came up and it created a zone, and it's really a supply area on the intraday, and it came up 1, 2, 3, 4, 5, a total of 6 times. Price has entered the zone, and so that's typically what's taking place now. So it's pulling back a little bit. We're not too much worried about this again because we've taken our trade off of the 4 hour. Okay, we've taken our trade off of the 4 hour, and that is what we're basing our entry and our exits on. Okay, and so just to add further context, so you guys can kind of get a feel for why I'm still in the trade even though the profit is going against me. All right. If we take a look at the TDI indicator, the TDI indicator is almost down to the, and this to kind of give some insight for you guys, but the TDI indicator is just about down to the oversold area, or the green price line rather. It's almost down to the oversold area of the TDI indicator, which means that pretty soon here the market is going to turn around, and well, we're looking for the market to turn around and continue in our favor. All right, and so again, market maker method is a quick scalping method. So more than likely, you guys, if you have been scalping that or using that to scalp, you're up 16 pips right now. And so again, keep in mind that TDI is coming, it's coming fairly close to be overbought. But let's add in some more context for you guys. So again, this let's blow this up a little bit, not too much because I don't want to have the chart looking disproportionate. So, but this candle here, this red candle, this is the 5 a.m. to 9 a.m. Eastern Standard Time candle, and you guys can see where it basically rejected before it even got up to the 38.2% retracement level. And so even coming into here, we see where price had a little difficulty crossing over the 23.6%. All right, we do see where these two bullish candles, my green candles in this particular case, are the bullish candles, but we see where these two, make sure you guys can hear me. Yeah, so we see where these two candles kind of they rejected, but yet the bulls were able to push through the bulls again. All right, and I do the quotations because you just really have to understand market manipulation. And so now, yes, doesn't mean that price is definitely going to go up into our golden zone area and hit our first take profit. No, that does not mean that. Would it be safe to take profit now and maybe to enter into the profit and enter back into the trade? Yes, we can do that as well, especially with the U.S. The U.S. has news coming out in 54 minutes at 10 a.m. Eastern Standard Time. The Fed's chair Powell testifies is what. So it's the Federal Reserve Chair Jerome Powell testifies before Congress, providing a broad overview of the economy and monetary policy. Powell's prepared remarks are published ahead of the appearance on Capitol Hill. And so that's what's taking place at 10 a.m. So based on what he reports, it could either cause the market to go up, go down, or really do nothing. And so we're looking for the market to and again, this is just a pullback, but I also wanted to provide some further context because, and I didn't have these on here, but you guys will see this kind of dark goldenrod color. This is a price point right here at the 38.2%, and so we see where the market shot through the 1.3 price point, and I'm sure if I had the other price points in here, let's put these other price points in here. Let's go with let's try. Okay, let's add the other ones in here. You guys see the price points popping up. I have these in the dark goldenrod color. Alright, so again, you guys even see where price came down to the 1.28750 price point. Alright, and it bounced up here. Okay, and so I really do think that the market will continue to go up. We do have a little bit of a pullback, but I think I really do feel that the market has a little bit further to push up to the north side. I don't think that the market is at the price point that the market makers wants it at. I'm just going to take that off. That the market makers wants it at um, before they actually continue in the overall downtrend of the GBP USD. All right. Sure, on the 1 hour we're at an exhaustion point, and so let's just pull out the Fibonacci based off of the 1 hour swings. Okay, and so we're possibly looking at the market pulling down to our break-even point here before continuing back up. Now it is Wednesday, which is a very good chance of a mid-week reversal. But again, I feel that, and what the market is showing me is, I'm not just going based off of feeling, but what the market has shown me with some other analysis that I've done. What the market has shown me is that it's not quite ready to totally reverse. All right, and so we can even look at the 4 hour candle. We can see where price opened here at 9 and it came down to here, but now it retraced back and now it's kind of pushing down again. And so this very well may end up being ended up closing as a bullish candle with a long wick here, kind of similar to this one, testing into let me see if you guys can see this, testing into this little short-term price zone here. And so for me, before I completely panic, I would need for price to break this little zone for me to, jump out and take profit, okay, or a small loss possibly. So that's where we are currently at 9:11 a.m. on this GBP USD trade. Again, it's very important for us to be able to analyze the market. Again, I know you guys are probably tired of hearing me say this, but be able to analyze the market, understand market structure, cycle, and manipulation. And so when we're able to do that, we're able to hold our trades a lot longer. Even if if we come into taking a look at this on the daily, this setup, even on the daily, this setup is you see profit is starting to go up, back up, but even on the daily, the setup that is formed is for a nice small but a nice push to the upside. So kind of have a little drop base and a rally going on. So granted, I know individuals are, and even myself, we push the higher time frame trading, slowing the market down for you, and that way you don't have to be so rushed, with your decisions. You can take time and process and think through your trading. That's one of my focal points for the Teach Me to Fish FX trading community, and then also just the Forex community as a whole, because it's grown so much over the past few years in popularity, and people are really seeing how authentic trading and investing in Forex is as a stream of income. People don't see it as a scam as you once did before. Um, Someone telling you, hey, invest in the Forex market, the foreign exchange market. There are high opportunities um, in trading. Look at this, guys. You guys see, remember I told you that it's very possible that that candle to end up closing. It's still too early now. It's still too early, but you guys can see the fight and the struggle between the bulls and the bears. Right, the fight and struggle between the bulls and bears, because we know um, that's not the case. That that was basically a stop hunt. That was basically, even if we go on the intraday, you can see it better. That was basically these individuals here who possibly um, um, were trading the London breakout, right, and pushing their stops up, right. Look at these long wicks, right. These are all stop hunts. These are all stop hunts. Like, watch this. I know I'm kind of all over the place, but I really I like sharing this information so people will know what's going on. All right, of course, we go in a little bit more in depth, but in the trading community, in the T. Smith Fish trading community, but you guys, you can see where this zone was created, like earlier, all the way at the beginning part of the day. I'm gonna change this to, I'll change it to yellow. No, I think that's a little harder to see. You have to go with a darker color, maybe chocolate. All right, so you can see all the way in the earlier part of the morning, when London opened, 8 a.m. their time, 3 a.m. Eastern Standard Time here in the U.S., where this zone was created, and then it's further being created, it's further being tested. Even on this 15-minute candle, it closed as a doji candle, but as a bullish doji. All right. And so, and again, it's still too early. I understand it's still too early, but I'm just sharing with you guys my thoughts. You guys are, you see, why I'm getting in the trades and staying in the trades. All right. Number one, being able to use proper risk management and taking that fear factor out that the market makers like to induce us with. All right. So, but yeah, so we're going to stay in this because, again, this is zones, this wicks to the zone, so they tried to rally up and come back down to push through it, and so far they have not been able to do so. All right, so far they have not been able to do so. And if we come on a higher time frame, we do see for the week where these demand areas, right? These demand areas were created. All right, so this one was created. You have this demand area here, which is a total of 33 pips that was created on Monday, and then on Tuesday we actually had a couple. There's one here that I did not mark up. That was a total of 19 pips that it was created. The Bulls won this 4-hour candle, and the Bears, they won this 4-hour candle, but the fight for the Bulls were it was strong enough that, yeah, the Bears won it, but look at that wick. Look at that wick that was created. Look at that demand zone that was created. Now that's on the intraday. All right, that's on the intraday. All right, and again, when you have deeper understanding and knowledge of the flows of the market, you know the market will actually flow from accumulation and distribution, not even supply and demand, because then again, you have to go, you kind of have to go past the market maker mentality and know that these are business people making money. All right, and when you have that understanding, again, you have the the understanding, or you can better understand accumulation and distribution. You can better understand um, the the market makers manipulating the market, getting the market to a particular price that's good enough for them to either buy or sell. All right. And so when we have that thought in mind, then we can kind of not have to be so afraid to trade. And even if we take a look at the weekly, now you guys saw where I drew the Fibonacci on the 4 hour, and I will attempt to redraw it again here on the weekly. But we have this big shift candle, all right. And again, you know that the overall trend is a downtrend. So on this weekly, last week we had this big shift candle to move us from this price point. I wonder what this price point is. Let's see. We got one spot 31728 and one spot 32051. But what I was saying was we have this big shift candle here, and whenever you have a big shift candle, like for instance this one over here, the market makers are going to come back and do. Here, I'll push it. I'll push it right here. The market makers are they typically come back, right, to try to get at least 50% of that candle, right? And so that's what this second week was. So this week, shift candle shifting from this zone, which happened to be a accumulation area. They shifted down here. The following week, the quote-unquote bulls won. The bears were in charge for about 102 pips of last week's volume. But the bears were fighting, or the bulls rather were fighting. And on this candle right here, look what they did. They shot through 50%. I told you, whenever you see a big shift candle, it doesn't matter what time frame you're on. The market maker loves to come back and try to get at least 50% of that back. They're greedy. That's what they do, right? And so you have to adjust your mind, right? Adjust your mind, and also learn the way of the market maker, right? Learn the way of the market maker. Learn the way of the investor, all right? But learn the way of the business person. But that's what they do. And so that's kind of what we're taking advantage of now, all right? We have this big shift candle shifting us further from this zone, just on the weekly here, and we have the 50% mark of this candle here, right? And just like over here, right? It took a couple of weeks, but they came up and they got the 50 at the minimum of 50% of this big shift candle right here, which was also, I bet, about 50% of this shift candle. Watch this. I'm dropping jewels right now too. Bam. What do we look at this one? Let me blow this up. Well, I can't, but I hope you guys can see that. Hope you guys can see that we had this big shift candle from this zone here. I'm calling it a zone, but I'm really talking about the price point, right? It's not, the zone like the accumulation areas, but you got this zone right here that was created, right? This consolidation area that the market needed to move away from, right? It consolidated long enough for them to gather in the contracts, and it just so happened to be more money up here than down here. So they shifted this week, the week of, let's see, this is the week of December 1st, 2019, right? That week they shifted up, and when they shifted up, even with this candle, even though it closed as a bullish candle, you guys see where it came close to the 50% mark, and then that following week, the because they're shifting again. We're painting a bigger picture for you guys because they're shifting again from this accumulation area. They got the 50% of this candle. All right, and now again, another shift candle from that week, and what they came up and they got more than 50%. All right, again, the rule of thumb is a minimum of 50%, and so they got more of the 50%, and so that's kind of what our counter trade is right now. And so with the hopes of maybe, hey, they'll go ahead and get the whole 50% this week, right? And that will allow us to have a larger profit margin, if you will, and not having to break even. But so hopefully they'll go in and get this 50% this week. But just like how it played out over here, it could be a couple of, they could get that back over a couple of weeks. Same way they did with this shift candle, shifting out of this this price zone, okay, or this consolidation. They shifted and they got it here the following week, right? Then they got it here to shift down from this accumulation area, and then this one is further shifting down, and they're pulling back, grabbing the stops, all right, grabbing these orders before they continue down again. We know what's going on, all right? We're not just jumping in the market and just trading just to be trading, all right? We understand that the GBP USD currently is on an overall downtrend, and I showed you guys this in the last video and I drew this off of the line chart, but you preferably want to draw it off of, you want to include your wicks, all right? You want to include your zones and things of that nature. So even if we did that, this would be here, and let me minimize that a little bit, bring this up, alright, and this would be more here, like that. I don't want to get it too close to here. I don't want to get it too close to my entry. Current trade. Cut it out. Alright, so the gold trend line, or the yellow trend line, I can't remember what color this is, but that trend line there, this is the overall trend line, and then we created a more aggressive trend line here. We could even do it based there. If we did it here on a more aggressive trend line, we can see the pullback a little better, okay? We can see where price came down, shot up past this trend line, all right? Came down to retest it, and now it's pushing up to, which I think is the bigger play, is to at least test the major trend of the GBP USD. Let's blow that up to push off of here again with this supply area right here. We see where the market over the months have tested it and pushed up, and again I think that the goal is to at least test the overall trend, and so we will have to wait to see if this market is actually reversing. All right, so it could be reversing, or the GBP USD could be going further down. But we would just have to be patient and wait to see how the market reacts here. And so that's why I really, even though on the weekly we're counter trend trading right now, but I think that the market will eventually find an exhaustion point. It's going to have to find an exhaustion point. It doesn't have to, but typically that's what you'll see. It's going to find an exhaustion point somewhere. All right, to push up. Maybe, it could possibly be down here. Now we do have a fresh supply area, and we do have a fresh supply area right here, and I'm going to make that gray. That was created, and it never came back to be retested. I know you guys are seeing a whole bunch of squares. So that's how I like to draw my supply areas, and I have my indicators automatically setting my accumulation and distribution. But again, we're not solely going based off of the indicators, but hey, when you can make trading easy for you as long as you know what's going on in the background, keep it moving, right? So, but it very well could come here and test this fresh area that has never been tested. I'm gonna have to get rid of this really quickly. Anyway, we have a couple of different fresh areas that haven't been tested. This hasn't been tested, so it can come here. All right, just do this quick little pull back. Could be creating a nice little head and shoulders. Here, left shoulder, head area here. All right, come back, create the right shoulder, drop down, test this, shoot back up, or come down here, test it to shoot back up. Either way, I think the market is pushing its way back up to the overall trend here to either retest it or break it. All right, to retest it or break it. So I think that's enough. I've shared the update. I've shared some really key nuggets. That's why with the market makers method, like that is a small, it's a small piece of the puzzle. All right, it is an effective piece, but it's a small piece of the puzzle. It's a trading strategy that I started out with that I still teach, right? Especially for individuals who are fresh into the Forex market. And when you first come in, you see the opportunity for you to be able to make some extra money and possibly replace your current income, right? You see that, and so I teach that. I'll teach the market makers method, show you a better way of understanding it. Because when I first learned the market makers method, I heard about it. I did research. I practiced on the research that I had, and I joined a group that kind of filled in some gaps. But I still had questions and still was trying to count levels and just all that kind of stuff, where you after years of trading the market makers method, you really don't, a lot of the information that's shared, you really don't need it, and especially once you have the knowledge of the market makers method, implementing the workflow, the workflow trading strategy and method, it makes it a whole lot easier for you. You can just wake up and look at your charts and just be able to see, okay, yep, time to get in. All right. So we're looking again. I had to stop doing that and look at the bigger picture of the market. And so if you're able to really practice patience and study and I feel that I've made it easy. If you come in, I feel that I've made it easy for individuals to be able to learn the market makers method. I know that there are some guys out there under a different persuasion. You guys you've expressed your opinion in the comments, but you're under a different persuasion that learning this, you can't learn it within 24 hours. I disagree with you. Um, you have to understand what I'm saying. You will be able to learn it within 24 hours, and because of how I have the Teach Me the Fish Effects trading community set up, you can be profitable within 24 hours. Why? Because you have access to the trading session rooms. You have access to um, the um, the trade alerts. All right, you have access to it. So yes, you can be profitable in the market makers method within 24 hours. All right. Depending upon when you join. If you join on the weekend, I really don't do too much on the weekend other than with crypto currency, because with the broker that we use, the crypto markets are open. So through the weekend, and sometimes we find good trade setups and sometimes we don't. But anyway, depending upon when you join the Teach Me the Fish Effects trading community, or if you join the Teach Me the Fish Effects trading community, then yeah, you can learn it and have a good understanding within 24 hours and be profitable, because I'm a hands-on quote unquote mentor, coach, whatever you want to call it. But um, yeah, you can be profitable. And um, so you guys see what we have here. You guys see the market pushing down. All right. This is one thing that you guys can do, keeping it simple. Again, salute to my brother Jay Wayne. He doesn't know he's my brother, but behind the scenes, he's my brother. Jay Wayne. And there's other videos out there. I'm not discrediting other videos, but just keeping it simple with your trend lines. Um, Even here, let's do it based off of today with the workflow trading template. You could have traded the market makers method like that. All right, you could have woke up and saw how the market was making this gradual move up, threw on the trend line and said, you know what, when the market breaks this trend line, all right, then I'm going to jump in and look. Especially even if you do, I call it the ASCII trading, where you get an alert. So your alert would have been the breaking of this trade line. This would have been your signal. This would have been your confirmation. And again, you're just scalping. So you could have scalped for potentially, that's 9 pips. But again, if you're trading at a standard, you're looking at what, $90 within 15 minutes. Not bad. It still looks like it could push down a little bit more. However, if we take a look at our TDI indicator, we can see where price came down and now it's bouncing in the Bollinger Band. Now it could come down a little further, just like how it did over here in this area, and loop back up, right? Loop back up and kind of work its way up. But again, even with the trend lines, guys, I think I shared this with you guys on the other video. Even if you threw on here, let's do this. Let's throw on an RSI 14 period. Guys, you can trade the trend line based off of the RSI as well. Watch this. You got your 2 points, all right? You guys know how to draw 2 points, all right? 1, 2, run it through. First point, second point, and let it run on. The RSI broke here, broke the trend line here, then it started moving its way down, and so you wait on price action. Where's your price action to come in? Here you go. You have right here, and it still worked its way down. Okay, like it's doing now. You can, you can use trend lines to trade anything. And I know the light bulb just went off for some people. Even with this downtrend, it's gonna come down here, right, and bounce back up. Okay. Once this trend line breaks on the RSI, then you come back up here and you wait for price action to jump back in the trade. So, but yeah, just really keeping it simple. I think that's what I commented on Jay Wayne's video. Any trading strategy adapts to keeping it simple, right? And so even with the basics, even if you don't know about the cycle structure and manipulation, if you just know simple support and resistance and being support, resistance, and price action, you'll do fine. Like, I know it's guys out there that's killing it, multi six-figure salary guys that's killing it, and they do simple support and resistance. That's it. The breaking of support and resistance. So keeping it simple, or rather any I'm going to delete this. Any trading strategy will adapt to keeping it simple. So yeah, I mean that's another way you guys can trade the market makers method. Just simple trend lines. Just wake up, try, give the market time to, do what it's going to do to produce a trend. Put in your trend line, go for it, or put in, your support or resistance, in this case here. You can, if we would have did it earlier. Oops, I picked the wrong thing. Based on the structure of the market earlier, support, play it going back and forth. Again, you guys see how the market is just rejecting this area. What's another 3.5 minutes left on this candle. This area is just continuing to be rejected. Like, come on, yeah, we're trading. I think I'm pretty sure a bunch of people have jumped in and just counting on this to be the midweek reversal, which again, it could be, but I'm just looking at the bigger picture, hoping that the market makers will go ahead and get this week, the 50% of this trade. But if not, then 4 hour will hold it. All right, we'll hold this trade, and maybe we'll have another deficit, until next week before it shoots up. Maybe we won't. But that's just the name of the game. When you jump in Forex, I think that's what really has helped my train of thought, is like, think like, not just like a market maker, but think like an investor. Think like a businessman. Think like those individuals who are out there making money off of the retail trader, right? That's all that they do. They get the market to a particular price that they want, right? And then they they manipulate it, all right, for their favor, to go in their favor. So I hate these little things. But yeah. So I think how long have we been going? 45 minutes. Wow, 45 minutes. I was kind of trying to wait for the 10 o'clock to see what's going on, because like just think about the manipulation. I'll probably get off before 10 and get back on and do another video, but think about the manipulation. All right, we have the market maker where they've induced for the whole day going up, and then they pulled it back against you. But now news is getting ready to come out, and so for the past hour they've been pushing it down. Right? What do you think? And I don't know. You know, they could push it down further. I could be wrong. Right? That happens. I could be wrong. But for the past hour they've just been pushing it down. Okay? And so they can do several things with that news. One, they can use it as a stop hunt to further push it down, and then we can see the retracement back up, right? Back up on its way to test the overall trend, all right? Or we could see them further push it down to go ahead and reverse for the week. So, and then, you know, get that 50% of that shift candle, that weekly shift candle here next week. So, it's 50-50 when when you're trading, right? But I'd rather do this than the lottery, right? You're talking about a 50% chance of being right and wrong when it comes to Forex. But you have like 1 in a million, 1 in 1,000, with the scratch off, 1 in a few thousand probability, and then with the lotto and things of that nature, 1 in a million, 1 in a couple of million probability. But you can come to Forex and have a 50-50 chance, and even if you get it wrong, you can cut your losses short and then jump in and go in the correct direction of the market. I'd rather do this. Like I'd rather do this, and I wish people, especially my people, would kind of get out. And I'm kind of on my soapbox right now, but kind of get out of that mentality. You're spending how much money a week, a month on gambling? When that same amount of money, you can put it in Forex, you can put it in investing, and all you have to do is win half of your trades to be profitable. You can take $100, put it in an account, trade 10 times, right? Depending upon your stop loss, not your stop loss, but your lot size. Trade 10 times, right? Get half of them wrong and half of them right, and end up taking that $100 account to maybe $150, or doubling the account to $200 in a month, compared to throwing it away at the lottery. Oh, I didn't hit. Oh, I didn't match this symbol on the scratch off. So yeah, I really think that news event is gonna it's not gonna go in the favor of the euro dollar. I could be wrong. I could be wrong. But just looking at it, I don't think that it's going to go in the favor of the U.S. dollar. I think they're inducing the market down, and they're going to shoot it up. But I don't know. We'll see. I could be wrong. I could be absolutely wrong. But again, when we practice patience and proper account risk management, and I say half of 1%, and so that means that the market has to go against you 200 pips to take you out. I know some individuals out there who they push a 1,000 pip, quote unquote 1,000 pip rule. So whatever your account balance is, you only want to enter the market that's going to afford you, 1,000 pips. So if you have $1,000, only enter your lot size in at $1, right? And this is more so swing traders who kind of have that mentality. Enter in, at $1, with $1,000 account, and then that way, if you're swinging, the market is going to have to go against you 1,000 pips before it wipes you out. But preferably, you have enough sense before 1,000 pip deficit to say, let me get out and just re-enter. So for me, I don't have a stop loss here. So, small loss won't be too bad. But risk and gains, guys. Risk and gains. You're talking again 106, 105 pip win. Well, that's what we're shooting for, right? I need to keep my calculator up, but I think we said, excuse me, I think we said 1,400, but let's say 106 times 16. So that's 1,600 there. And then if they go rather to the top, you're talking about 147 pips. So 147 times 16. I'm talking over 2,300. So I'll risk a couple of hundred for that. Like, I have my number. Like, I have my, I don't like putting in the stop loss. I will do a trailing stop, but I will go 1-to-1. See, so 1-to-1 be on the low end around 1.2825, which I wouldn't go that low, but that's 1-to-1. If price breaks, I'm only giving up 63 pips. Price would have to break 1.28699 price point for me. I'm only giving up 62 pips for possibly 147 pips, but 62 times 16. I'm only willing to give up 992 in this case. All right. So that's what it's all about investing. So, all right, I've rambled on long enough. I'll come back and just come on and do another video as far as the news that's going to come out, and then plus you guys will see anyway. I do back around 1 p.m. anyway to do a update for this trade for you guys anyway. So, but I hope that there was something that I said or shared or showed with you guys that kind of open your eyes to some things, help you with your trading. If you would like to be a part of the Teach Me to Fish FX trading community, then please feel free to head over to the teachmetofishfx.com. You can see the web address in any of the 4 corners of this video. And feel free to head over and to sign up, and we're gonna get you right. I'm gonna get you right. We're gonna set you straight right now. I am the only mentor or trader for the community, but we're working it to get this, to get it growing, and but nonetheless, I'm here. If you join the community, you get access to me. If you join on the mentorship program, you get deeper or further access, more access to me. So, excuse me. That's kind of where we are. We are at right now a $400 profit in total, but including commission and swap, we're at over 370. So we're gonna hang in there and see what's what, and keep it moving for right now. Okay. All right. Because you never know. We could be in one of these trades where we get a potential of 336 pips instead of our 106 or 147 pips. Okay. That we may be there. You never know. But you'll never know if you're always afraid to stay in your trade, if you're always afraid for the market to go against you, if you hate seeing your account in the negative. You know how many hours I had to hold, I had to wait. I got in on the trade here on Monday, and so I had to wait a total of 24-hour period before a 4-hour candle closed in profit for me, and it only closed in profit for me for 8 pips. Potentially I was up 60 pips at one point. Right now I am up 27, 28 pips. Was down 21 pips at one point, but now we're up 27 pips. So that's just the flow of the market. It fluctuates. It goes up, it goes down, and so you just have to be confident, be patient, and be confident in your analysis. So, all right, guys, I think I rambled on enough. I think I shared enough value for you guys in this video. And again, I told you, win, lose, or draw, you're gonna be able to see what we do in this particular trade. So, all right, guys, I am going to go ahead and get out of here. As always, please remember, if you stay in God, you will stay in control. And until next time, y'all, happy pip fishing. Y'all be easy. Bye-bye.